Okay, so I am trying to fix this so that it can look normal. Okay, so that it can look like I'm not trying. I think you won't notice it. Okay, I know you will. I'm staying at home and I'm struggling. Like, what the hell? Okay, no, wait. We're going to do the brush challenge, but I don't have a brush, so. Hi guys, welcome back to my channel. For those who are new here, welcome to my channel. My name is Wanja Waithaka and I am trying to be your business enthusiast. Yes, so before we continue, if you haven't subscribed to my channel, kindly do so by clicking the subscribe button below. Yes, so let's get on to what we are going to be talking about today, which is penny stocks. When you hear the word penny stocks, what comes to your head? So penny stocks basically are very cheap stocks. These are stocks, for example, in the US, which are valued at less than $1, and in the UK, it's like less than $5 basically. In Kenya, you can say that penny stocks basically cost below 5 shillings. Because what are we saying when we're talking about penny stocks? We're talking about cheap stocks. So before we get onto that deeply, we can start by backtracking and trying to remind ourselves what we talked about stocks. So for example, when you're buying shares, what exactly are you doing? You are buying into the ownership of a company. So when you are buying into the ownership of a company, what exactly happens? The trading house, for example, the Nairobi Securities Exchange, will issue out stocks. For example, the companies that are listed like Safaricom, BAT, Sasini, some of those companies, they're listed with their specific prices and you can buy those shares at that certain price. Later, you can sell them at a maybe higher price and get the profit, right? How do shares work exactly? When you're saying that, okay, you are going to buy at a low price and sell at a high price, how does this happen exactly? The beauty of demand and supply. If many people start buying shares in a specific company, it's going to drive the share price up. It's kind of like, let's say I buy this earring specifically, yeah? I buy them at, like I have like 10 pairs of these, right? So I buy them somewhere for 200 shillings, right? So when I show this to my friends, one of them wants to buy them at, let's say 300 shillings, right? So another person will be like, oh my god, I love your earrings. Oh my god. Then another person will be like, oh my god, I love your earrings too. You know? So everyone will be wanting to buy those earrings, and then you'll be like, by the way, I can make a profit out of this, right? So what am I going to do? I'm going to buy more of these earrings, and then instead of selling them for 300 shillings, I'm going to sell them at 500 shillings. So that is what is called the beauty of demand and supply. So when there's high demand, it forces the stock to rise, and when there's low demand, when people are not really buying shares, that is when the price of those shares go down. So let's get to the factors that actually contribute to the rise and the fall of the share price. Yeah. So let's take Safaricom. Safaricom in the beginning of this year was supposed to diversify, if I can call it that. They were supposed to expand into the Ethiopian markets. That was when they were thinking about it. When you hear such news, you're thinking that, oh, Safaricom is entering into a new market. They've already succeeded in Kenya. If they're going to Ethiopia, which has a lot of people who could use such a service and actually succeed, people are going to be like, by this Safaricom is doing well, let me buy shares in this company because I actually feel like, and yeah, well, these guys are going to be doing so well. In future, they're going to even be doing better in future because of what they've already done here. If they're going to replicate the same thing in another country, it's going to grow, and it's going to grow even bigger. So when such news was announced, the share price of Safaricom went up. You can even go check it. It actually went up just because of that. They hadn't yet started their work in Ethiopia, but just by saying that they're going to do that, the share price went up. Another factor that can contribute to the rise in share price is good profits. If a company is doing well, many people will be attracted to that specific company, and they'll start buying shares in that specific company, driving the share price up. Another thing that can drive the share price up is, for example, big deals. If, let's say, people are merging, people are have acquired a certain patent, people are venturing into new business, or they're diversifying their portfolio, something like that, it can drive the share price up, because this partnership, these patents, it's showing the attractiveness of that company, which will attract more people to buy shares from that company, and in turn the share price goes up. So when you look at the share price going down, it's basically the opposite of what I've talked about. So what are the factors that could lead to the share price going down? So losses in a company. If a company is not doing well, people will want to pull their money out of that company. So what do? They sell the shares. When they sell the shares, people are withdrawing money. That means the share price is going down. Another thing that could lead to the share price going down is bad news. That could be associated with, let's say, the media or something like that. For example, you will see that the relationship between the US and China affected the share price of so many companies, because, for example, if with bad relationships, people will be afraid of putting their money somewhere, for example in oil, and that means the share price will go down, because people are holding their money, they don't know what's going to happen, so they'd rather not even invest than invest at all. If people get scared that something is happening, they pull their money out of those companies, and in turn the share price goes down. For example, another thing is natural causes. For example, this, I don't want to call it a natural cause, but let's say diseases and all that. For example, the coronavirus. When the coronavirus started lipukaing, basically, there was a time that the financial market almost crashed.
Investor optimism about the Trump administration's coronavirus proposals lifted world markets overnight after yesterday's historic losses. All three of Wall Street's major indexes plunged more than 7% on Monday. The Dow's more than 2,000-point drop is a one-day record.
It was sort of like the 2008 crisis, as in all people were removing money from the markets. It was crazy. It was so crazy. So because of this corona thing, you can see that share prices of companies are going down, because people don't really want to invest. People are holding their money. People have removed their money because of the losses they were making during that corona time. And why was that? People were removing their money, which drove the share price down. So those are kind of the factors that really affect the share price to rise or to fall. Yeah, I hope you have understood up to there. So back to what we were talking about, which is penny stocks. Penny stocks are cheap stocks, as I said. In the US, these are stocks that really, they're not traded in the main trading houses, for example NASDAQ. They are traded it's because they're really cheap, or probably they've been really undervalued and people have no interest in them. So you'll find them going for around 0.05 cents. You can find them going for 40 cents, 50 cents, 60 cents, something like that. That's why they are cheap. I'll go back to Kenya, but what makes these penny stocks so special? Penny stocks are cheap. If you're allowed to buy into a company that is trading at 40 cents, as in, I mean, if you put something like 1,000 shares, all you have done is spent 400 shillings. Like, that's how cheap they are. And you bought like 1,000 shares. Number one, they are cheap. Another thing is that they have a very high spread. In one of my videos, I talked about how you can earn money when you trade in shares. For example, you buy at 10 shillings and you sell at 12 shillings. The 2 shillings is a 20% increase. That is a profit that you are gaining. With penny stocks, let's take it for example, you buy a stock at 30 cents, 0.3. In 4 hours, it's risen to 60 cents. That is a very small margin because it's only moved in cents, like it's only moved cents wise. But then if you think about it, it's actually increased by 100%. So the spread is so high. Actually, when I'm talking about spread, what I mean is a small change can make a huge impact. Why am I saying this? Because that 30 cents difference costs 100% profit. This other one, for 10 shillings to 12 shillings, it's cost a 2 shillings difference. 2 shillings is a lot, but it's only cost like a 20% profit. Are you seeing why the spread is high in the penny stocks and not in the other stock, like the normal stock? So that's why people usually go for it. Another thing, now this is not really an advantage, but another thing with penny stocks is that they are subject to manipulation. Why is this? Because a stock might be trading at such a low price, and you just call people and tell them, by the way, this stock is going to do so well. They've just bought a patent and blah, 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 blah. In fact, I want you guys to watch something, just 4 minutes. I want you to understand what I mean.
Where are your Quotrons here?
Quotrons?
Yeah, computers.
No, we don't even need computers here. We just trade right off the pink sheets here.
Pink sheets?
Yeah, they're penny stocks. You know, companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
Yeah, this one, Aerotyne, is a really interesting, Aerotyne.
Aerotyne, yeah.
Aerotyne.
Aerotyne, yeah.
Very hot stock right now.
Yeah?
Yeah, they're just a couple of brothers that are making radar detectors out of their garage. They're out of maybe it's microwaves. I'm not sure, but you call the company's main line, their mom Dorothy answers, and she is so sweet.
The company is crazy. The spread on these is huge.
Yeah, and that's the point. What's your name again?
Mine, Jordan Belfort.
Jordan, what do you get on a blue chip stock?
I make 1%. I did make 1%.
Pink sheets, it's 50.
It's 50%? 50% commission?
Yep.
For what?
It's our markup for our services.
So if I sell a stock at $10,000, my commission is $5,000.
If you sell $10,000 worth of this stock, I will personally give you a blowjob for free. And I hope it happens.
Hello, John. How you doing today? You mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Does that ring a bell? Okay, great. Well, reason for the call today, John, is something just came across my desk, John. It is perhaps the best thing I've seen in the last 6 months. If you have 60 seconds, I'd like to share the idea with you. You got a minute? Name of the company, Aerotyne International. It is a cutting-edge, high-tech firm out of the Midwest awaiting imminent patent approval on a next generation of radar detectors that have both huge military and civilian applications. Now, right now, John, the stock trades over the counter at 10 cents a share. And by the way, John, our analysts indicate it could go a heck of a lot higher than that. Your profit on a mere $6,000 investment would be upwards of $60,000.
Jeez, that's my mortgage, man.
Exactly, you could pay off your mortgage.
This stock will pay off my mortgage.
John, one thing I can promise you, even in this market, is that I never ask my clients to judge me on my winners. I ask them to judge me on my losers because I have so few. And in the case of Aerotyne, based on every technical factor out there, John, we are looking at a grand slam home run.
And this is a clip from The Wolf of Wall Street, which is, I just love that thing. I recommend that you watch it. So let's talk about manipulation. When I'm talking about manipulation, let's take, for example, an event. an artist from abroad has come to Kenya. You don't even listen to their music. But the way that event has been hyped, you're like, you know what, I'll just go for it. I don't listen to their music. I don't, like, this artist doesn't cross my mind. But because of hype, you're going to go for that event. It just happens. Many of us have been a victim of that. And that's the same thing that happens to manipulation of penny stocks, because many people will be called to buy this particular stock, because of some certain news which might not even be true. And when many people buy this particular stock, the share price goes up, which causes people to actually profit from it. And it's like, it wasn't even that big of news, like it wasn't that important, but the way many people have invested in this stock, the share price went up, making the people who invested in it at a low price benefit more. But it might not show the true value of the company, because if maybe you look at the profits, if maybe you look at the statements, it might be showing that this company has actually been going on losses. But because many people were convinced to actually buy that particular stock, the price will go up. So they are subject to manipulation. Yeah. So let's go back to Kenya, our something country. Do we have penny stocks? Yes, we do. They are not traded actively like in the US, like they don't have their own trading center, because the only trading center we have is the Nairobi Securities Exchange. But let me explain why they are known as penny stocks. Basically because they trade below 10 shillings, below 5 shillings. Some of the companies that trade below 5 shillings is Uchumi, KQ, below 10 shillings is Uchumi, KQ, Kenya Power, Mumias, Home Africa, Deacons, which was even removed from, which stopped even trading in the Nairobi Securities Exchange. So why are these penny stocks? It's not like these particular companies were supposed to be trading at that particular, like below 10 shillings. These are big companies. These are companies that we've grown up knowing. So what's the big deal? Let's take Kenya Power. Kenya Power, I know all of us have frustrations with this monopoly, but Kenya Power in 2010 used to trade at 24.3 shillings. Right now, it's trading at 4 shillings and 50 cents. Why is that? Corruption scandals from the top management. Another company is Kenya Airways. We all know about Kenya Airways, all know about their problems, how they're trying, currently they're trying to get a state bailout. A state bailout is when the government tries to basically save your company. Another company that has gone through a state bailout is Uchumi. So Kenya Airways in 2010 used to trade at 100 shillings. 100. 10 years down the line, they're trading at 4 shillings and 95 cents. Why? Corruption, mismanagement of funds. Like, there's so many problems that Kenya Airways has had, especially in the last 3-4 years. If you've been following the news, yeah, I'm not even going to. Another company is Mumias. Right now, Mumias, their factories are closed. Mumias, hey. So is it really worth buying shares that are cheap? You have to look at the backstory of these companies. Of course, if these companies had started at like 40 cents or 50 cents or 1 shilling, and right now they're trading at 3 shillings or 4 shillings, you can see that, okay, these companies have been improving. But then, if you're coming from 100 shillings to 4 shillings, so in Kenya, is it really worth it? Some of these companies have reached these particular prices because of mismanagement of funds, corruption from top management. They end up eating into their profits, bad strategic decision making. All these have caused the share prices to go down, as in all these have caused the shareholders to basically lose confidence in these guys. And what was the outcome of that? The share prices have like declined by more than 300%, as in, okay, I'm exaggerating, but you get what I mean, man. You get what I mean. Yeah. So I hope you kind of have understood the concept of penny stocks. I was speaking with so much anger because I'm like, yo man, like we could be doing better. Right now the share prices have like gone down, especially because of the coronavirus. Investors are not very confident about investing right now. I know people might be saying that, oh, because now the share prices are low, this is the best time to buy. Of course, you can buy right now, but make sure that you're buying into the right companies, because some of these companies have been doing poorly even before coronavirus. Some of these companies had beforehand problems even before the coronavirus. So if you're investing in shares, make sure you do your research. Look at their statements. Have they been making losses even before the coronavirus? Like, have they been doing well, or have they been doing badly even before the coronavirus? These are some of the questions that you're supposed to be asking yourself before you invest. Just don't go into investments right now because they are cheap. Yes. Yeah. So apart from that, this corona thing, like during quarantine, what have I been doing? So in the beginning, I was one of those people who were like, oh, you know, we've been given so much time, this is the time to do the things that you didn't think you would do, you know. Until I came to realize, ever since I finished high school, like my whole life, I've never really had a break. So why am I struggling to do so much? And I've never actually had a break, because I know once this quarantine period is over, like everyone will just be running, everyone will just be, I don't know, like trying to recover the time they lost. I know I'm going to be running during that period. So I just decided, by the way, I'm not going to force issues, but I try to do what I can when I can do it. But I'm really not forcing anything. Yeah. So that's, I've tried to keep fit. What else have I done? I researched on penny stocks. Yeah. I need a bit because of this CPA. Yeah, and I'm happy with myself. I actually feel like I'm achieved. Yeah, I'll actually be starting a puzzle like 3 days from now. That will keep me busy. Yeah, I think I have this all planned, man. I have this all planned. Yes. So this is kind of the second last video of Understanding Shares series. The last video will be on the day I actually buy shares. So personally, I'm not buying right now. I'm just going to wait a bit, do my research, and then now I can start buying shares in some specific companies. So I don't know when that will happen, but I won't wait until I buy shares to do the next video. Otherwise, I hope you guys have enjoyed this series. I hope you've enjoyed this video specifically. If you have, please give it a thumbs up. And I also appreciate feedback, so you can reach me at Wanjawaithaka on Twitter, at Wanjawaithaka on Instagram. I really appreciate feedback and I take it into consideration. Yes. So I hope you guys have a good quarantine period. I hope you're keeping safe for the benefit of the rest of us. Yeah, I hope you're being safe. Those people who are going out unnecessarily, be safe, man. Just be safe. Yeah. Anyway, have a good day, have a good evening, have a good week. Yes. I don't have a script for the last bit, man, but you get it. Yeah, so please like, share, and subscribe my video. And remember, I always appreciate feedback. Reach out if you have any questions, if you need any clarifications. Yes. Bye.